Shares in Lowe's fell 1.8% in pre-market trading Wednesday as the company lowered its full-year sales outlook despite reporting higher sales and profits in its latest quarter. The home improvement retailer said Wednesday it will close all 99 of its Orchard Supply hardware stores, a chain with locations in California, Florida, and Oregon, by the end of the year. Lowe's acquired Orchard in 2013 after that retailer filed for Chapter 11 bankruptcy protection. "We are developing plans to aggressively rationalize store inventory, reducing lower-performing inventory, while investing in increased depth of high-velocity items," Chief Executive Marvin R. Ellison said in prepared remarks on Wednesday. "Our strategic reassessment is ongoing as we evaluate the productivity of our real estate portfolio and non-retail business investments." Mr. Ellison said Lowe's would provide an update to changes to the strategy at the company's analyst and investor conference set for December. Also on Wednesday, Lowe's announced it has appointed CVS Chief Financial Officer David Denton as its new finance chief. That move follows the recruitment of Mr. Ellison, who was most recently with J.C. Penney Company and led Home Depot for a dozen years. In May, Mr. Ellison replaced former CEO Robert Niblock, who announced his retirement shortly after 3 new directors joined the board as part of an agreement with activist investor D. E. Shaw & Co. C. Shaw has pushed the company to better compete with Home Depot Incorporated and do more to capitalize on an improving real estate market. Another activist, William Ackman, the leader of Pershing Square Capital Management LP, has also built a stake in the firm. In May, the Wall Street Journal reported Mr. Ackman's firm built a stake then valued at roughly $1 billion in what is expected to be a friendly investment. Shares in Lowe's fell 1.8% in pre-market trading Wednesday as the company lowered its full-year sales outlook despite reporting higher sales and profits in its latest quarter. Lowe said sales rose 7.1% from a year earlier to $20.9 billion, beating expectations from analysts polled by Thomson Reuters. Comparable sales rose 5.2%, while U.S. home improvement comparable sales rose 5.3%. Analysts polled by Consensus Metrics were expecting comparable sales to increase by 5%. The company reported net income of $1.5 billion, or $1.86 a share, compared with $1.4 billion, or $1.68 a share, a year earlier. The results included a $230 million charge related to the Orchard closure. Excluding certain items, Lowe's said profits rose to $2.07 a share, beating expectations from analysts. By comparison, Home Depot reported last week that sales jumped 8.4% in its latest quarter and its U.S. comparable store sales rose 8.1%. Lowe's expects sales in fiscal 2018 to rise about 4.5% from the prior year, down from 5% previously. The forecast for comparable sales growth was revised to 3% from 5%. The company said its updated guidance includes as much as $475 million in costs related to lease obligations, depreciation, and amortization and severance agreements tied to Orchard.